Okay. So this should be quite repetitive. There's a down payment of 5%. Calculate the monthly payment. We have to first figure out what 5% is. So this is what you want to do. And so that is 18,750. Okay. If you have that, you get a mark already. We're going to make this out of 3, by the way, not just 2. Now to figure out the payment, we have to go 375 minus 18,750. This is what we call the mortgage, right? How much the loan is going to be. In this case, they don't give us the table rate, so we have to go figure it out based on the interest rate and the time. So what, 325 over 25 years? It's 486. So you just getting that 486 gets you a mark as well. Okay, so this part here gives you a mark. Then you got to subtract, right, to get that answer. So when you subtract these two, you end up borrowing 356,250. Okay, it's 486 over 1,000. And then you calculate it. You don't have to show this step. I would prefer you showing this step where you come up with your mortgage. And that is 17, 13, 38. Okay. So 1 mark for the down payment, 1 mark for the 486, and 1 mark for your actual monthly payment calculated. Of course, if you pick the wrong table rate, you lose a mark. But I will honor you figuring out your payment thereafter. Yeah. Oh yeah, sorry. Yep. Thank you for pointing that out. Yes, it is 31, my bad. Calculate the total paid to the bank. That would just be 1731. So whatever your payment ends up being, times 12 times 25, right? Because it's 25 years. And I get 519,414,00, okay? So this is what you should be getting there. How much interest was paid? I know how much I paid the bank. I will subtract how much I've borrowed, which is right in front of the table rate, if you did that right. So you get 163,164.00, okay? So that's how much you paid in interest. Yikes, right? 2 ways to lower your monthly mortgage payment. I hope you have that on your study sheet. You can increase down payment. You can say save up for a larger down payment or something like that. You can increase the term, right, or time to pay off. If you do that, you could also mention shop for lower interest rate. Interest rate, any of these will do. Okay. And then I've got your amortization table. The first row is completely filled out. So we'll go half a mark for each entry. Okay. So here you got to go payment minus the principal to get the interest. This should be 730.74. To get this, sorry, I didn't mention equity. Don't worry about it, okay? I should have. Equity is how much you own in the house. So this technically goes up every time you apply the principal to the unpaid balance, but you won't have to do that on the exam or on the test. So you don't have to worry about that when that comes across. So my bad. This, you just go this minus that, you should get 317,731.17. Sorry. This is what you get. And then this one here, you've got 2 options. you subtract these two to get that, or you subtract these two to get that. Regardless, you should get the same answer. 113832. Okay? So we're still going to make this worth 2 marks, okay, just to make it easier. So I would say, how about this? 1 mistake, you lose 1 right away. And then if you make 1 mistake, like if one of them is right, you still get 1 out of 2 though. Okay. So 2, 4, 5, 6, and 3, that's 9. So this page is worth 9. Go to the back side. Insurance. It's not saying that we're renting. Okay, it's like a homeowner's insurance. We want the yearly premium. Guys, what do we know about the maximum when it comes to your table? The maximum we can get right off the table is $200,000. So we need to buy extra insurance. So what I'm going to do is I'm going to take away $200,000 right away, and I'm left with $140,000, okay? Over. So that means that when I do the insurance calculation, I will first get what it is up to $200,000. We're in area 3, and we want comprehensive. So area 3, comprehensive, you max out at $799 and you pay $391 for every 1,000 extra. So $799 is going to get you a mark. This part right here is going to get you another mark. This one, sorry, it's a little crooked. Right? And do we need to multiply by 1.10? We don't, because it's a $500 deductible. All right. I hope you nail insurance on the test, on the exam test, whatever. I know it's a little complicated, but this part right here, I'm going to save ourselves the need to actually watch how I type this in. You get 547.40, and so now we just need to add that up, and so you get 1,346.40 cents. So you get another mark for actually calculating it correctly. So if you didn't calculate it correctly, if you're missing bed mass, something went wrong, -1, okay? So 2 out of, oh wait, yeah, sorry. I meant to make this out of 3. Let's make that out of 3 right now. What was that? There. So there. Calculate the premium if they chose a $200 deductible instead. So all we have to do, whatever your answer was here, it doesn't matter. As long as I see you adding 10% to that, you get this mark. Okay? If I see you adding 10%, you get this mark. Explain the difference between standard and comprehensive. Did I talk about that? I think I touched on it. Standard is like your basic insurance. Covers the property and named items. So the policy kind of has like we cover the basics, There's no fancy jewelry or collectibles or anything like that would be included there. The policy is kind of restricting. When you do comprehensive, it covers property and all items. Okay, it's a blanket insurance. It kind of just covers pretty much everything. I've never had to do it, but if you drop your flat screen TV, $4,000 flat screen TV as you go down the basement, apparently it's covered, right? As long as it's accidental. If they notice you went the baseball bat style, it's not going to be covered, right? So don't get your hopes up. It's like, I need a new TV, right? And obviously check with your insurance. State at least 3 factors that contribute to your yearly insurance. I mean, there's tons, right? Your deductible. right? Is it 200? Is it 500? Is it 1,000? I know we don't deal with 1,000 in this course, but the deductible can actually vary. Okay. Type of insurance, type of coverage. By that I mean standard. Yikes. Comprehensive. Okay. See, I didn't dress up as a doctor, but I certainly write like a doctor. Type of coverage, and then you can talk about location of the home, right? Which area you're located, discounts that you qualify for, right? If you're claim free, alarm system, etc. I mean, it just goes on and on, right? Like you have lots of things that factor into your, but you needed at least 3, okay, to get the 3 marks. So 3, 2, and 1, that's 6, and 3 is 9. So the backside is also worth 9, okay? 9 and 9, 99 Luftballons. 18. Okay, put your name and last name on there.